Is David Berman of Durbin Capital. David, last time you joined us, you were talking about numbers you had really not seen. It was towards the end of the summer, in maybe ever in your career following this. Has it continued to be as strong since we last saw you?
David, thank you for having me on. It has continued to be strong. We have never seen strength like this ever before in the 20 years of collating all of retail, including for the last 10, 15 years, Samsung, Apple, and Amazon. We have never seen numbers like this before.
What does it do to? And how long can it continue? And is it far beyond what you, of course, coined that term, SaaS, Samsung, Apple, and Amazon? Is it far beyond their ability as well to grow?
Yeah, 5 years ago, we started speaking about Samsung, Apple, and Amazon. We noticed, obviously, a huge impact that they have. Right now, they're about 2/3 of the growth of all of retail in the U.S. Obviously, they were much less than that before. We are seeing, when we summarize all of the numbers, it tells a different story to what you would read, what the average viewer reads in the newspaper. When you read the newspapers, you see companies with bad sales. Last quarter, when we spoke, in fact, 2/3 of retailers had negative sales growth. So the news is out there right now, this quarter, which is just finishing. The third quarter is just finishing. We're about 95% complete. And half the companies have negative sales growth. So the general perception is that things aren't that great when you're looking at, this company missing numbers, especially high-profile names like Macy's, Nordstrom's, the department stores, all missing numbers. Sales this quarter for the department stores down 25%. That's horrific. But there's a big but. When you look at the big companies, and you got Home Depot, you got Costco, you got Target, you got Walmart, they are, and of course you got Amazon, the total shows a totally different picture. So last quarter when I was on with you, we couldn't believe the number. It was up about 10% increase in total sales in the U.S. This quarter, and again, this is hot off the press because they haven't finished reporting yet.
Right.
We are seeing up 12.6%.
12.6%.
It's a mind-boggling number, David.
Wow. Yeah, that is a number the likes of which we haven't seen. It does point to this sort of strange economy we're in where people who have obviously kept their jobs have an ability to spend even more, particularly because they're not spending on other things, whether it's travel or so many things. David, one thing you've taught our viewers through the years to focus on is inventories, because you focus so closely on them. And there's a story there as well, I know, in terms of what have been some negative margins way back at the beginning of the pandemic are now reversing and helping profitability.
Correct. There's a lot of things going on to create retail nirvana at the moment like we have never seen before in retail. A few things. First of all, on the top line, you're seeing this incredible growth of 12.6%. Mind-boggling. What's really interesting, David, is that even though you had the government relief package a long time ago, economists thought that sales would fall off a cliff. Instead, they've actually accelerated. So, that kind of makes you think about, we're all waiting for another relief package. And certainly there are so many people who need help in this environment. However, when you look at the big picture, can the economy really take a relief package in terms of potential inflation, high interest rates, which could create a lot of issues for the financial markets, obviously. So that is something to bear in mind. Also, when you talk about inventories are at a low. The spread between the increase of sales and the inventories are down 3% year over year. That spread is the biggest spread we've ever seen for the last 2 quarters, this quarter and last quarter. The spread is about 10%.
Shepard Smith here. Thanks for watching CNBC on YouTube.